Hello, folks. Welcome to Kudlow. I'm Larry Kudlow. So, like most of you, I stayed up late last night reading President Joe Biden's speech to the House Democrats at their retreat in Baltimore. That was a joke. It was riveting. That's another joke. Of course, he accused Republicans of raising the budget deficit by $3 trillion over the next 10 years. That's one of his standard untruths. He's referencing the Trump tax cuts, which, of course, he hates because they were so successful. Those tax cuts, by the way, brought in revenues as well as growth. And those tax cuts delivered a 6.5% growth economy when Mr. Biden was elected with a 1.4% inflation rate. Mr. Biden bragged about how important his $1.9 trillion American Rescue Plan in March of 21 was and how successful it was, even though in his first full year in office, economic growth plunged to 0.9%. Inflation soared to 6.5%. It's not over yet. Biden went on to say Republicans would cut Social Security, Medicare, Medicaid, veterans benefits, of course, all the standard stock nonsense. He took credit for cutting the budget gap, which, as everyone knows, is untrue because the temporary reduction in deficits is from emergency COVID spending that expired. Meanwhile, the CBO just scored a $20 trillion increase in budget deficits over the next decade, which Mr. Biden forgot to mention. He started to talk about inflation, which might have been interesting, but then he kind of wandered off into personal anecdotes like how long he's known Steny Hoyer and stuff like that. But inflation, I'm afraid, is proving to be very sticky at around 6%. In fact, today, productivity came in by declining by nearly 2% over the past year. Unit labor costs up over 6%. Business inflation coming in at 6%. Biden started mocking specific Republicans in his speech, but the basic point is he will do anything not to cut spending, which is expected to rise to nearly 25% of GDP. That's about 5 percentage points above the 50-year average. And I might add, going back, the unit labor cost increase is going to do damage to the corporate profit story and the stock market. So will Biden's tax hikes as well. Interest rates keep rising. They've got a ways to go on the upside, including mortgage rates and credit card rates. And all that helps explain why Americans feel they are poorer and worse off financially than they were a year ago. People have jobs, but their wages are below inflation, and their living standards are falling. Biden forgot to mention these things as well. So, after reading Biden's literary masterpiece, I walked over to the computer and set down on paper a few ideas how to reach the kind of 3.5% plus growth that we have for 50 years following World War II, and we can do again. These are policy proposals. They are ballpark estimates I'm going to give you. Bear with me. It's not exact, but it's in the ballpark. First up, extend the Trump tax cuts. That'll add at least 0.5% to real GDP. And by the way, if you add a modified flat tax of 20% of corporate and personal income, that would add probably 2% plus to yearly GDP, according to the Tax Foundation. Then get spending back to 20% of GDP. That would add 1/3. And 20% reopen oil and gas spigots would add another 1/3%. Workfare requirements would add another 1/3%. Indexing capital gains to inflation would add another 1/3%. And repeal all the new Biden regulations. That would add 1%, according to Kevin Hassett. And then strict M2 control guided by commodity price level targets to keep inflation permanently below 2%. There's no telling how inflation certainty at less than 2% would boost growth. No telling. Anyway, folks, that will get you to 3% or 3.5% or 4% or more. Okay? It's not that hard. It's all common sense. And surprisingly, none of it was in Mr. Biden's speech to the House Democrats yesterday. Shocker. That's my riff.